You already know I hyped this one up. That's right, in my stocks to buy for the last month, or for the month of May. And there's a good reason why. Obviously, we had some earnings reports here, and we're going to take a look at it. This thing's up nearly 2 and 3/4 percentage points after hours. Was down 2% during the normal trading session, though, so nothing super exciting there. But let's take a look at these earnings real quick and look at Realty Income. The monthly dividend company, as it's well known, reports a quarter one FFO of 88 cents, beats by 3 cents. Whoo, baby. Revenue of $414 million, up 17% year over year. That's right. Beats by 17.21 million. Can you believe that? Let's just be fair. We had projections that this is a stock that was going to get hit hard. We talk about real estate investment trusts. This is the one that I really like right now. One of two that I really like right now for a couple of reasons. Their tenants are really good ones who are going to always pay their leases, right? They have the money to pay their leases. That's what the best part about them leasing out. Obviously, they have a broad portfolio, but everyone they have really is, they're all good businesses. These are companies that don't need protection from this. They will be able to pay their lease, which is massive, and you see that beat because of that. So analysts here were expecting, they were looking like they were going to get a 70% to 75% percentage point as far as what their April rent was due. They were expecting only to get 70% of that. So that's why you saw a big beat, because obviously they hit 83% of the April rent revenue. So pretty massive. Collected 82.9% of contractual rent due for April as of May 1st, and is in rent deferral talks with tenants that account for a majority of the unpaid rent. So again, they're going to get this money. Okay, they're going to get this money, as well as certain tenants that did pay April contractual rent. So quarter one FFO of 55 cents beats the average analyst estimate of 85 cents, 88 cents versus 85 cents. I don't know what I said there. Increased from 82 cents in the quarter a year ago. Revenue exceeds the consensus of $397 million and rose from, that's right, $354 million a year ago. Big growth there. They invested $486 million in 65 properties and properties under development or expansion, including $165.6 million in 4 properties in the UK. So they're working on global expansion as well. As of May 1st, Realty Income had $1.2 billion cash on hand and $1.1 billion available on its $3 billion reserving credit facility, excluding the $1 billion accordion feature. They withdrew guidance on April 9th due to the uncertainty over the pandemic, though. So that's something that has been hit into the stock as is. So they did that early, so that way it didn't hit during earnings day. Obviously, as companies pull their guidance on earnings day, they've typically been going down, and you probably have noticed that. So let's look at some of these highlights. Net income per share of 44 cents. Gotta love that. AFFO per share increased 7.3%. They invested, obviously, as we talked about that, they raised $752 million from the sale of common stock. Again, devaluing the shares a little bit, but they made the money for it. They were good on that. And they completed the early redemption of all $250 million in principal amount of the 5.75% notes due in 2021. Pretty good there. So, as we see from total revenue perspective, look at that growth year over year. Net income available to stockholders grow year over year as well. Net income per share grew year over year again. Big. We love to see that. Just good things. Year over year growth is big here. In March 2020, we announced the 90th consecutive quarterly dividend increase, which is the 106th increase in the amount for the dividend since the company's listing on the New York Stock Exchange in 1994. The annualized dividend amount as of March 31st, 2020 was $2.79 and 0.6 of a cent. The amount of monthly dividends paid per share increased 3.1% to 69 cents in the first quarter of 2020. as compared to 67 cents in the first quarter of 2019. During the first quarter of 2020, the company distributed $233.8 million in common dividends to shareholders, representing 78.7% of its AFFO of $297.2 million. And again, these companies really are aiming to spend around 90% of that back down. So typically with these companies, they have to pay over 90% because they get tax benefits for it when they pay over 90% of that back to shareholders. Now, obviously, they don't want to increase that dividend just massively out of nowhere and not be able to pay it down the road. So they're keeping it consistent with their normal plan of raising. So nothing weird going on there as far as I'm concerned. So as of March 31st, the portfolio consisted of 6,525 properties located in 49 states, Puerto Rico, and the UK, and leased approximately 630 different tenants doing business in 51 industries. Pretty cool. So net lease agreements with weighted average remaining lease term of 9.2 years. These are companies that are set in stone where they're at, and they're good companies, so they don't plan on going under. As of March 31st, portfolio occupancy was 98.5, with 97 properties available for lease out of the 6,525. So everyone's using these properties, right? They don't have many buildings to spare. They're giving out all those buildings for people renting. As compared to 98.6% in December of 31st and 98.3% in March of last year. So right around that mark. They always hit around that 98 to 99% mark. They always are. So nothing crazy as far as that's concerned, really. So rent revenue has grown slightly year over year. Nothing major. They really have the same amount of people, so it doesn't shock me that doesn't really make much of a difference there. From the impact, as of May 1st, they collected a 2.9%. So they collected 99.9% of contractual revenue due for the month of April 2020 from their investment grade tenants, and 82.9% from the top 20 tenants. And some of those might have been like the fitness places like LA Fitness, who are still under lockdown. Maybe they didn't pay their rent, but obviously they will this upcoming month when they open up. So that money's getting to them for sure. Nothing super exciting. The only thing we look for after that is, as we already know what we look for, that's not nice FFO. But we look at assets. So really for this company, I like to look at just total assets in general. It's not really current assets for this company. You don't really look at that. But that's right. This is money. This is pure cash money. $18.8 billion in cash. That compares to 18.5 as of December, 3 months ago. So $18.8 billion. And then if you look at total liabilities of $8.3 billion, you see they double what they have in assets, or twice as much in terms of assets that you see in liabilities, which is massive. Definitely really cool, really exciting stuff there. Company's got a lot going for it, so I really like what this company's doing. They just do great stuff. They're great. I mean, this even shows a chart of how just really nice they've been. Total return, just percentage-wise, they usually have a good chance of beating the market for the most part. They perform very well historically, if you include dividend in there as well. So this company's just great, and I'm glad to hold it.